You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster Joe Venazzi from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it's time once again to rock out with your favorite bi-weekly options sojourn. Yes, it is time for the Option Block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the Options Insider Radio Network, coming at you into your ear holes live every Monday and Thursday, noon Central, 1 p.m. Eastern, or after the fact on whatever the heck you listen to this on. We don't judge. You can listen to it on a donkey cart in Estonia via tin can and a string. We won't hold it against you as long as you listen. And if you like what you hear, leave a review so others can continue to find the program. And, of course, keep those questions, those comments coming. We do love to hear from you guys. And joining me on the old program today, let's see who we got on the old all-star panel. Let's see. Let's go out to, he hasn't been on this program in a little bit. Let's welcome on the greasiest of meatballs, Mr. Mark Sebastian from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to the program, sir.
Hey, good to be here. I was on the show on Thursday. I feel like rejected now.
Oh, you know what? Because you weren't on Vol Views. That's what threw me off. You're usually on Vol. You weren't on that one. You had Andrew.
Well, I hadn't. Now, to be fair, I had not been doing very much Option Block, but I'm trying to get back to maybe doing this show once a week and doing Vol Views. So
you're throwing me all off with your.
Expect to hear
coming on OB, not coming on Vol Views. I'm all a Twitter over here. I blame you, not me. Therefore, I have cast the blame back onto you.
I concur.
So nana boo boo to you. All right, let's keep on rolling. We are also joined. He's been on a few times, and he's on yet again. We are pleased to have on once again the last emperor, Mr. KONSTANTIN VRANDOPULO, holding down the active trader strategy desk seat. The Fidelity hot seat for short here. Mr. Last Emperor, welcome back to the program, sir.
Thank you, gentlemen, for having me on. Very much appreciated. Always looking forward to it when I get a chance. I'm in here Mark, I do have to say I haven't done one with you in a while. So,
well, there you go. Ha ha.
Yeah, it's good to
breath of fresh air. There we go.
With Caracalla, my favorite Roman emperor.
The last emperor turning the tables on the meatball there. So there you go, 2-on-1. The meatball. He can no longer protest. There we go. All right, and keep on rolling. We've got to change his name pretty soon from Uncle Mike to Undisclosed Location Mike, because he is joining us once again from an undisclosed location. He is, of course, formerly known as Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. I know the rule. We can't talk about where you are, so let's just get into it. How are things going, sir?
Going great for out here in parts unknown. And let me tell you, you can take Uncle Mike out of St. Charles, but you can't take the St. Charles out of Uncle Mike.
He is indeed. Born and bred is in his DNA, listeners. You know, it's in our DNA, a little bit of options. So let's figure that out with a little bit of the old trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, where we talk about what the heck is trading out there. And kicking off the week, you know, it's been an interesting couple of weeks. We're up, we're down, most of it trade war driven, a little bit of some other macro issues, OPEC and a few other things filtering in there as well. Some earnings, of course, in there as well on the micro front. All of that feeding into the blender, the maelstrom that is the market. And coming into this week now, it seemed like we were going to be a little bit unched to kind of start the day. People market not really finding its footing. And now it's given up some of that footing here to kick off the week. Not a big sell-off, pretty mild. Actually, once again, Dow leading the charge to the downside, which a couple of times now we've seen that over the course of the past week, which is interesting in and of itself, perhaps showing where some of the weakness is centered out there. Dow off about 0.25% right now coming into the show. S&P and NASDAQ both neck and neck, a little bit more than 1/10 of a point to the downside, 1/10 of a percentage point, I should say. And, of course, gold and crude also taking a little bit of a break as well. Of course, crude can take a break. It's at about 59 right now after all the OPEC drama that has continued to bolster that price leading into the upcoming Saudi Aramco IPO. Of course, you want to know all about crude and what's going on out there. Check out our TWIFO on the network wherever you're listening to this. We had some market makers from the oil space join us to talk about all that fun stuff and more in the last episode. So check it out if you haven't done so already. And, of course, our old friend VIX Cash ticking up a wee bit here. Was almost exactly unched. We were at about a 14.75 on Thursday's show. We were at about a 14.75 as well come into this show. Just starting to tick up a little bit now. Up about, not even quite a quarter of a point there. Right around the 15 handle, 14.95 or so. So up about a quarter of a point. But in the land of VIX, that's pretty much rounding error. There's not much going on out there. Old friend VVIX also coming off a little bit from last show. Is at about a 99, threatening to break into that triple digits level on last program. This show ticking off a bit down to a whopping 98. Of course, if you like all the nuances of VVIX, check out Volatility Views, where we talk about some of the things that may obscure that number a little bit out there. And, of course, our old friend VXX, the gift that keeps on giving to the downside. Once again, going back to the downside off about almost two-thirds of a point or so, right around the 17 handle again. So we're talking VIX and volatility and VXX. And because he hasn't been on in, I don't know, many months, let's kick it off with the meatball. Mr. Meatball, sir, what is catching your eye out there this week?
You know, we have trade. We have, I think, the Fed coming up. We still have a little bit of earnings. I'm interested to see kind of what holiday stuff is going on. But, you know, this is a week where, you know, we've now seen a couple days in a row of VIX. So like Friday, we get that big upswing. VIX is real firm. Today, we're down 4 points, and the VIX is up 1.5. It's back over 15. So I'm watching really sticky vol, really sticky vol, not stiffy vol. And I'm watching, I'm watching Apple, which is getting a little bit of a face punch after a huge rally yesterday. That's really let us lower. And I'm watching, a little bit of the FANG, a little bit of I don't think the FISA impeachment stuff really matters at all. And that's kind of my where my thoughts are.
It does seem like the impeachment has kind of, as the progress wears on of the process itself, it does seem like the market is growing a little bit. I wouldn't say accustomed to it, because it can't be accustomed to the impeachment of a president, but just the process itself doesn't seem to be weighing on the market as much as it was, obviously, in the beginning. That's a normal process. As things perhaps develop, we may see that turn. Speaking of turning, Mr. Uncle Mike, sir, what is turning in your neck of the woods? This is not exactly, the market has turned kind of against you a little bit. It is no longer an Uncle Mike market, at least for today, but what is catching your eye from your undisclosed location, sir?
Quite a few things, I guess. I think that the impeachment, I agree with Mark. I think it is going to be kind of how do you guys put it, a meh, so to speak. And you can see how the Clinton impeachment just totally collapsed the 90s bull market, for sure. But I say that with a very large amount of sarcasm. So I think the lesson from this is that the market and the economy, no matter what, is much bigger than the president, much bigger than one man. And, every time I shouldn't say every time, but a lot of times I'll hear people say, things are going to be good now that we have a Democrat in the office. Oh, things are going to be good now that we have a Republican in the office. And that's, there's really no correlation to that one way or another. Politics is politics. And thankfully, we live in the greatest country in the world. And because we're in the greatest country in the world, no matter how much you like or dislike the president, we can still be successful regardless. And so I think the fact that we're still tinkering around the all-time highs when the president is going through a potential impeachment inquiry shows the strength of our nation. Now,
can I just say, I didn't know that we lived in Lesotho, which by far the greatest country in the world.
I don't know. I mean, I would say that
you could make an argument.
Brunei, you think that's better than Cuba?
I've been told Brunei is pretty nice right now. I'm a big fan of that one. Let's not forget about Turks and Caicos. Together, separately, not great country. Together, wonderful country.
When there are no hurricanes coming through them, right?
The hurricanes only hit Caicos. They don't hit Turks.
Right. But coming now that we've heard from the communist meatball over here talking about other countries, not just Denmark, I think that with where we are right now, we're tinkering around the all-time highs. I could see this just kind of being an annoying, when you walk out in the field, sometimes you get these cockleburrs that stick to your shoelaces. That's kind of what this impeachment inquiry is, I think, to the market. It's really not a big deal. It's not hurting it. But it's just kind of annoying, so to speak. Whatever side of the aisle you're on, I think it's just kind of an annoyance to the market more so than anything.
So we got Turks and Caicos, cockleburrs, all sorts of deep insights going on here. This is why we missed the meatball. He brings this deep, far-reaching insight here onto the program. Mr. Last Emperor, save us, sir. There's a lot cooking. It's always interesting whenever I toss it to the Fidelity hot seat because, you have certain expectations, your spies, your apples, and that sort of thing going to be dominating the tape over there for a pretty big, broad market player like Fidelity. You guys always surprise me with some esoteric biotech or something else that is always lighting up the tape over there. So surprise me yet again, sir. I put you on the hot seat quite literally. What is lighting up the tape over there in Fidelity land today, sir? Yeah,
guys. So first and foremost, and I was quite a bit surprised by the number one spot holder here by orders in Fidelity of Fidelity customers is UGAZ today, which kind of probably deserves maybe its own little segment of strategy block at some point. I know we've talked about triple leverage securities before, and this definitely comes with a big warning. UGAZ currently down about 18%. But Fidelity clients are trading it from the long side pretty heavily. I don't remember seeing this kind of a skew, right? So 72% buys, 28% sells. Now, UGAZ is a triple leveraged product that is tracking the price of natural gas. I guess it's really based on the S&P GSCI natural gas index. That's how it's calculating its indicative value on the daily basis. Definitely a product that is very complex in its nature. Not only the fact that it's, trying to track the carry cost of future contracts in nat gas. Currently, I believe 80% Jan, 20% Febs. But the fact that it's effectively triple leveraging, right? So, comes with a lot of caveats. I would say that anyone who is looking to trade these products needs to 100% understand that it is meant for daily tracking, so daily trading tool, really. Should not be held for probably longer than a day unless you're catching a significant trend and you're on the right side of that trend. Today, UNCHD, the ETF that is tracking nat gas, is down 6%. I believe it's probably one of the lowest levels that we've seen in a very long while, probably close to a decade at this point. And of course, UGAZ is at the lowest level that it has been ever in the history of its existence. The reason why I want to point out to everyone that, it is a tricky product to trade is because if it wasn't reverse splitting, probably 5 or 6 times over the history of its existence, it would be very close to zero a long time ago. This is the type of product that you need to be careful with. And again, I just want to reiterate, over the long haul, it is not an investment that is tracking the commodity itself, right? So you're not ever going to be benefiting with delivery of natural gas, physical, right, in any way. So be mindful of that. I remember during 2018, I've been having quite a few conversations with clients kind of through the summer months into the fall, how natural gas rallied tremendously, and this product, UGAZ specifically, rallied with it a tremendous amount. But because of the volatility in natural gas, both the triple leveraged positive and triple leveraged negative products were down on the year. So if you were looking at DGAZ, UGAZ in 2018, even though there was a huge spike, if you didn't take advantage and sell into the strength, it came back down very quickly. So buyer beware. It's a good thing that the SEC has not allowed options trading on this product, in my view. Probably would have been a much worse mess than it is right now. So be careful with this thing. Just because it is at a brand new all-time low, it doesn't mean that you need to be loading up the boat. And if you are, you're making a very short-term bet, hopefully, on the commodity that it's trying to track. Okay, so second one that is on the list, and it generally is at the top, Apple. I know that Mr. Meatball already discussed the fact that he's watching it. Obviously, a very, very large market capitalization name. I find it interesting, right? Since Apple made it into the Dow, it's having pretty big effects. Right now, I believe the Dow divisor is about close to 7 points, 6.8 points, or something like that. So, stock being down $5, it's probably 35 to 40 points of Dow being down, and Dow is the leader to the downside today. I'm sure Boeing is probably putting a little bit of pressure on it as well. So price weighted index leading to the downside, and obviously, like Mark said, reversed all of its gains from Friday. So would be interesting to watch that name a little bit closer. Fidelity clients are leaning to the buy side as well, though. 63% buys, 37 sells. The third one on the list is Canopy Growth, which, again, that's another surprise for me. I don't think it has been on the list in the last few months, at least not at the top. Today, CGC, ticker CGC, up 12% on the news that they got a new CEO. Sounds like the chief financial officer of Constellation Brands, ticker STZ, is actually going to be the CEO of CGC. Apparently, they've been hemorrhaging money, right? Having a very difficult time controlling costs. The price chart reflects that very clearly. It's been on the downtrend for the better part of 2019. And is bouncing today. We'll have to wait and see whether or not it's going to be able to take out the high of the 21st. I think the high there was 21.56, came pretty close to it. pulled back a little bit right now intraday. So one of these names that has, a very high implied volatility level, in percentile or rank, in percentile or rank terms, and is trading options very actively today. On my last check, I saw that it was doing probably over 100,000 contracts, and you generally don't see that kind of action in Canopy Growth. So there's plenty of folks trying to handicap this name, thinking of where it's going. I saw that there was a ton of action on the D's 2025 calls. So not sure who is positioning how, but definitely active today. And then the last stock, and as a common traded stock by Fidelity clients here, is ROKU, up today 1.72%. Very volatile name. Implied volatility hasn't really kicked up or kicked into gear as it has in previous quarters. It generally kind of starts to rise into its earnings report, even if it's rallying. But right now, relatively flat. Still high, though, right? So, about 60% based on the way 30-day to expiration options are trading. But, Roku's been a name on the list. And the options markets, I would say, in Roku today are a little quieter than they generally are. I saw that it traded 60 or 88,000 contracts on an average volume of around 207,000. So I know that there's a couple hours to go in the day. We'll have to wait and see what happens, but a little quieter in the options markets in there today. That wraps it up for the top four. A couple of names, like I mentioned, definitely surprised me. And again, want to underline, triple leverage securities that are tracking commodities, that are tracking the futures markets, especially those that only trade futures without, physical presence of the exchange between, say, the hours of 2:30 Eastern and 4 o'clock. You need to be very careful in getting involved in there because, it's moving away from its indicative value just because there's nothing that's populating until 4 o'clock for the value calculation. So be mindful of that, ladies and gentlemen, and wish you good luck.
The fun world of triple leverage security. Where would we be? What would we do without those? But the optionable ones are even more fun. That's a conversation for another day. Let's see what's lighting it up out there and kind of a mix to week start here to the week. Coming into the latter portion of the trading block here, seeing things doing decent paper, nothing really blowing the doors off today. VIX at about exactly 200,000 contracts right now. The ADV is still shy, continuing to creep below that 400K level at about a 384 today. SPY a little bit north of a million, about 1.15 million. The ADV is right around 2.5 million out there. The S closing in not quite at about 670,000 contracts, not quite that 700K level. ADV also a little bit north of a million out there. The Q's at about 265. The ADV just a tick, just a hair under 500K out there. And the Russell, a.k.a. the IWM version, at about 120,000 contracts. ADV just a hair under 300K out there. Let's roll on out to see where the individual equity options action is today. If you want to break into the top 10, it's going to cost you a meager 91,000 contracts. That's all it takes. That shows you kind of what type of day we're having out there, listeners. 91,000 contracts get you the number 10 spot. That would be Microsoft. Number 9 is Baba, $1.04 on the tape. Number 8, AMD, a perennial top 10er, usually a top 3er. Today it's all the way down at number 8, 110,000 contracts. Number 7, CGC at $1.10 as well, so kind of tied with AMD. Number 6, FCX. Again, you're seeing some weird names trickling into the top 10 out there. Shows you again what kind of light day we're having overall. $1.12 out there. Number 5, Facebook, a name most of you have heard of, at 120,000. Number 4, Tesla, also a name most of you either love or hate. $1.42 out there. Did you get your Cybertruck pre-order in? Do you hate it? I'm sure you have an opinion either way. And let us know. You probably have let us know on this one. Number 3, PCG. We're going to talk about this one in a little bit. Nearly 200,000 contracts on the tape. Number 2, DHR. A lot of interesting names in the top 10 here. 210 and number 1 with the bullet. I think you can guess it. On a day that ends in Y, it's usually Apple, and it is yet again doing a lot of paper out there today. 465,000 contracts going on out there in good old Apple land today, which is interesting because the stock's off 4 handles, it's about 1.5%. Still north of that 260 level, 266.5 or so right now. So a little bit of underlying movement, a little bit of Apple paper, pretty much a day that ends in Y out there. Let's look out to the week that's coming. It's still mostly interest is focused on the macro side, but there still are some earnings trickling in. Remember, if you want the full breakdowns, the earnings move and analysis and results reports, theoptionsinsider.com is the place to go. Click on that options news and articles tab to begin your journey. Of course, a lot of that data coming at you, courtesy of our friends over there in ORATS land. Today, we got good old Chewy after the bell. If you're into online pet products, it's the pets.com of the 21st century. Maybe that's damning it with faint praise. They're popping off after the bell today. Tomorrow, you got GameStop and Dave & Buster's, so two related names popping off. AutoZone as well. Wednesday, we've got American Eagle, Children's Place, a bunch of clothing retailers going on out there. Lululemon, everyone's favorite home of the see-through yoga pants, popping off on Wednesday. And Thursday, got Costco and Oracle and Broadcom. So still some big names coming off. Sienna before the bell on Thursday as well. So a lot of big names to watch if you like the micro focus. There are some earnings move results reports on the site right now as well, including a few names up there. Let's see who we've got in the earnings move results before. Oh, Zoom, our old friend Zoom, the name that keeps on giving. It's kind of like the Roku. It's another one that's maybe more volatile than you would assume. Zoom right now trading at about $66, up about 3.25%, a little over 5%. And looking at this, they were pricing in. Now let's see. The stock has moved, and they were pricing in over 6% is what they were expecting from an earnings straddle perspective, about 6.3%. They're delivering a little shy of that right now, about 3.8%. So kind of keeping in line with a lot of the narrative we've seen this cycle of overpricing, under delivering, at least for a lot of the names out there. If you want the full, including the full season report, we have all that for you over there on theoptionsinsider.com. Now it's time for us to keep on rolling, getting weird, getting crazy. It's time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. Let's get weird. Let's get wild. Let's get whimsical. Let's kick it off with the big print that's kind of on our radar. It's on everybody's radar. The ORATS guys wrote about it. Even our buddy, I see the Flow Master floating in the chat around there. He's writing about it as well. It's PCG, a.k.a. Pacific Gas and Electric out there. They're kind of the big dog in the equity options unusual activity space today in terms of what's lighting up the tape. And what came across our tape was a large print to kick off the day here. It was all the way out to June. It was looks like a June 20 risk reversal, but usually when it's done for this size, it's usually probably against equity, which would probably mean it was a collar. What we noticed was a 20,000 lot of the June 20 calls going up for $1. So right off the bid against the June 6 puts for $1.38, which were lifting the offer. Also 20,000 times before. I'm getting ahead of myself here. I'm so excited by all the activity going up in this. Before we get to that, let me break down what the heck's been going on for you folks out there who have not been following PCG, aka PG&E. A lot of acronyms in this one. We talked about this before. It's kind of been a little bit of a frequent offender here on the Odd Block. A year ago, they were trading, let's see, about 25, almost $26. So right now they're at, of course, 11.25, up about $1.60. So $26, it's well north of where they are right now. And then they sold off actually after the Great Nadir. They sold off in January. It's not in Christmas Eve like everybody else. They sold off in January all the way down to $6, 6 and change, $6.36. That's a big sell-off. And then rally right back up again by February, up to 19.5. So you can see why they've been on our options radar over the course of this past year. Pretty volatile for a utility. And then they got up to about $23 again in April and kind of vacillated around that range again, only get down to the high teens again in July, and then sell off pretty hard again in August, back down to, about $10 and change. And they kind of drifted back down again to 3 and change in October. 3.30.55 was their 52-week low out there. Now they're back up to 11.25. So for a utility, I think the term for this one is freaking volatile. Let's see, again, I mentioned that was kind of a print going up, looking like a collar. Seems like our buddy, the Flowmaster, lurking in the chat there, he tends to agree. They wrote it up. He terms it several large collars on the Amex, with a trader buying the June 6 puts to sell, to finance those 20 calls, all done tied to stock. Largest block is the one we talked about here, the 20,000 lot, going up for a debit of 38 cents. They paid $1.38 for the put, listeners, against $1 for the call. Doing it against 900 shares of the stock at about 1109. They had other blocks of similar size, 15,000 again. So total over 50,000 as we're talking right now, about 50, almost 52,000 right now on the show. So pretty sizable. Mr. Meatball, let's kick it off. We see a lot of people buying upside calls and swinging for the fences. See some people buying puts. We don't usually see collars for this type of size. So A, are you on board with what myself and the Flowmaster and everyone else out there seems to be saying? You think this is a collar as well? And then B, what are your thoughts on A, doing a collar for this much size, B, that time frame in June, and then C, keeping it all in the same month, doing it all June, or maybe do you prefer playing with it a little bit, maybe pushing the put out a little bit and moving the call up a little bit? What's your preferred collar MO, sir? So 3 questions there.
Well, it's definitely a collar. It's probably a creditor, or, it's somebody that's got a stake. This is not on an island. This was not done as an island. You got to wonder whether is this a bet on we're going to have some clarity in the next before June on what the outcome is going to be for this company, right? What they already settled kind of part of their deal with some of their creditors. What's next, I think, is kind of the big answer. And this is definitely related to someone trying to put 2 and 2 together and hedge off some sort of position. And just based on how it's built, they think we're going more likely to go up than down. And really, in a lot of ways, from a value perspective, this is not very expensive, right? I'm getting really good upside premium for something that is, paying. If I can get this trade for about 15 cents, 20 cents, it's not very expensive. Pair that with some junk grade debt, and now I've got a pretty nice 3-way trade.
Yeah, it's kind of hard to really argue with the levels on this thing, and just from a pure stock perspective, you could see why he might choose this. $20, yeah, I'll sell it there by June. That's nearly 9 points north of where we are right now, so I'm sure he'd be happy to sell it there. On the downside, if things turn even more dire, he doesn't want to get back to the 3 handle again. We saw it can do that as recently as October, so he's stopping himself out around the 6 handle. So the levels are, I think, understandable out there. And you're right, it isn't a absurd premium. I was kind of teasing about adjusting the collars. I know with a lot of this large institutional paper, they don't have the time to really babysit and perfect the collar the way it probably should be done. So they put it all up in one block in 1 month. I understand why they would, particularly if you're doing 50,000. You need a little bit of uniformity to what you're putting up out there. But tell you what, this is so sizable, and it's on everyone's radar. We're going to come back to this one in a little bit. I have a feeling we're going to come back. We'll be forced to come back to PG&E sometime between now and June anyway, because it's on our unusual activity radar quite a bit. So I'm sure we'll probably talk about some other activity. But if not, sometime between now and June, we shall return to see how our friend is faring out here in the collar space. Speaking of friends, let's go back to another frequent offender here on the Odd Block today. Our old friend Corning Glass. I've joked with your compatriot there, the Rock Lobster, and he said this as well, that Corning Glass is always that name that kind of seems like it's going to be something. They're Gorilla Glass, whatever, 875,000. It can stop a bullet, and it's great. It's on every mobile device known to man, and yet the stock never really seems to reflect that, never seemed to be able to get out of its own way. Looking at the chart here over the past year, pretty much showing that exact thing. Of course, Corning Glass listeners, ticker symbol GLW. Right now at about a 28.60, up about 3/4 of a point, or right around 2.5%. This is a name that's kind of showing exactly that over the course of the past year. A year ago, it was trading around $32. Then it sold off almost immediately down to about 28. Of course, in the great nadir of Christmas Eve. Then it rallied back up again. By January, it was trading 33.25 again. By February, up to about 35. kind of hovered there for a while. Then it sold off yet again, right back down in June, down to about 28 again. Then right back up again by July, up to 34. So it giveth and it taketh away. Then it took it away again in July. It went from about 34 right down to 28 again. See, seeing a little bit of a pattern here. And kind of vacillating on this 28 to 30 range for the better part of the last few months, listeners, up and down, up and down. Kind of on the downswing and just ticking up again today for the first time. So maybe we're playing out the same pattern yet again. Let's see what our Eye of Sauron found for us out here today. Let's see. It's call love out here. Or I should say, maybe not call love, but this individual print seems like it's some call crushing. But then again, there's a lot of paper going up out here, so maybe there's more to be seen here. Let's see. There's the Feb 30s, what caught our Eye of Sauron today. A big block of almost 9,000 going up for 73 cents. Worth noting, these are dramatically below the bid. It was 83 cents, but these are also pretty late. So late execution means take that with a bit of a grain of salt. Total volume, though, is pretty substantial out here. Over 25,000 going up today. Coming into Showtime, this one had a call-to-put ratio of about 24 to 1. One of the more aggressive out there in the market today. It's worth noting there are earnings in this cycle. The earnings are on the 28th of January. So maybe someone looking to overwrite a little bit, harvest a little bit but he's gone out to February, which is kind of interesting. Again, maybe that's more of a dearth of month and strike selection problem. Of course, we have talked about Corning Glass a lot here on the program, most recently back on the November 18th show, where we discussed some line in the sand puts, the Nov 30 puts that actually went out for about 65 cents, so they went out in the money, so that was kind of a little bit of an interesting one. They were pinned right going into expiration, so maybe someone who was harvesting some premium, maybe popping some tums there going into the end, but interesting stuff. Mr. Meatball looks like a bunch below the bid here, but a total of about 25,000 calls going up on these Feb 30s that are kind of all over the place. So what do you think our friend is up to out here? You think he's overwriting ahead of earnings? You think he's swinging for the fences? What do you think he's up to out here, sir?
I think it's an overwrite. That's my best guess. But, you don't know. But it appears to be an overwrite from kind of the way it's structured. So I'm thinking you're right. It's an over, Mark, you're right.
Yes. See, you learned. You know how to get back on the show. You disagree with me. And that's how it works out. We could pencil the meatball in for a further program after that. All right, and last but not least here on the odd block, if you want some weirdo names, maybe names you don't track every day, we got you covered here with our final name. This is Copart Inc. Ticker symbol CPRT. Trading today right around $88, a little bit shy of that, off about 70 cents or about 0.75%. This is the name. If you wonder what this is a online vehicle auction and remarketing service based out of Dallas, Texas. They also have operations in Germany, Ireland, Brazil, Spain, and the UAE. So there you go. That's what Copart Inc. is. And a year ago, they were a pale shadow of what they are. It's been a good year here, looks like, for Copart Inc. A year ago, they were trading about 48 and change, so close to half of where they are right now. And it's been pretty much a long, slow upswing. Maybe not that slow, but a decent upswing nonetheless, paying off pretty much to where we are right now, hovering not quite at, but pretty close to the 52-week high of about 92.5. So pretty much doubling on the year, this name. Not a bad run here for Copart Inc. Let's see what our Eye of Sauron found in this ongoing love fest that is Copart Inc. Yeah, it looks like I was going to guess probably some call love, and that does seem to be what we have cooking over here. These are the March 90s going up for $4.10, about 3,400 times. These are opening, obviously. We don't talk about them usually, unless we'll tell you if it's a roll, if you think it's a roll, or closing. These are opening. Let's see, 410s looks like lifting pretty much the offer on these bad boys, nearly 3,500 times. There are earnings between now and then. Earnings are on the 19th of February. So, Mr. Meatball, this seems like some old school odd block paper. Someone pretty much swinging for the fences here. I would say a cheapie, but it's not that cheap anymore. Pretty rather expensive car auction name. Is that your take as well, sir? You think someone's just got a little bit of love for Copart?
Yeah, I mean it's 5% of the value of the name, and they've got earnings coming up, and they're buying a call. It is, these are definitely the let's let's put these on the watch list, because I'm interested to see if this is a smart customer, because if it is, this is somebody I'm going to track. But yeah, this is a straight up bet on the underlying going up.
Yep, great mind, sir. I'd already, as you were speaking, I already typed it in. It is going into our watch list as well. So that watch list continues to grow, listeners, as we keep on rolling. It's Monday, this time for the Strategy Block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
All right, listeners. Undisclosed location be damned, Uncle Mike. He is determined to deliver you some options, wit, and or wisdom. Uncle Mike, sir, deep from your bunker, what wisdom do you have to dispense to us today?
Don't put your head up too soon. No. Deep from the bunker, down from the mountains. What we're going to talk about today is doing stuff while you're waiting. So in other words, right now, you could argue that the market is kind of having a hard time breaking through the 315 level, at least on SPY. It just got here, but let's say that you are bullish or bearish for that matter, and the market's just kind of hanging out between 310 and 315. Well, I think these strategies could apply if you are long premium, whether you're bullish or bearish, or if you're long the underlying. So let's say, for example, that you are long a call option. But right now you feel that you're definitely bullish, but just kind of frustrating waiting for the market to break out. And you look at your Greeks and you see the theta that you're giving away every day, and you're just kind of having a hard time with it. What can you do about it? Well, I like to recommend that at times like this, if you're bullish, stay bullish. But if you want to mitigate some risk in terms of time decay, what's the best way of doing that? Well, my opinion in a situation like this would not be to simply sell a call against a call or sell a call against underlying. My recommendation would be to sell a call spread or a put spread and have some additional capital. So first off, when mentioning this, you need to have it set to where you have some additional capital to do these things. If you're trading 100% of your account on an option and you don't have any money on the sidelines for adjustments, you're asking for trouble, in my opinion. So what can you do? Let's say that you're long a 4-month call, a 6-month call, whether it's in the money, at the money, or out of the money right now, and the market's just not moving as fast as you want it to. But on the flip side, you still think it's going to move, and you just want to mitigate some of that theta risk. I like doing a vertical call spread out of the money. The concept is similar to that of a covered call, meaning you're selling premium, you're giving up some things, but what I like about a call spread is that, yes, you're giving up some of the upside, but you're only giving up the upside between the strikes. If you just sell a call against your long call and create a diagonal spread, let's say, or a vertical spread if you're doing it the same expiration, then you're giving up all your upside past that point. And if all of a sudden this market comes ripping up one day, you do not get to rip up with it. And that's disturbing. That's not fun. I've been there. We've all been there at some stage. Now, the other side of it could be, okay, let's say the market channels down or goes down a little bit but stays within a channel. One thing you could do is use that opportunity to sell a put spread. I've talked about it on this show a lot of times, how on down markets, if I'm bullish, I think it's one of the best times to sell a put or a put spread just because vol's up. Now, yes, you'll have to pay for the long leg of the put spread as well, but ultimately, a lot of times when vol comes up, like it typically does in a down market, not guaranteed, not every time, but a lot of times when it does, you can get more favorable put spread prices, meaning you can either take in more premium for selling a put spread closer to the money, or you can take in what you normally would and just go a little bit further out of the money and have a little bit more of a cushion. So I think that what I like to do when markets are not moving like you want them to move and you're either long premium or long underlying, I like selling verticals, whether it's to the upside or to the downside, just because that's a way with which to mitigate some time decay risk. But also, if the market does have a major move one way or another, you didn't risk selling something naked. So if you were to sell a naked put, then market goes up significantly. It's not going to be very pleasant for you. you sell a call option against the underlying that you own or against the long call that you own, then if the market goes up significantly, you'll miss out on the upside. Yes, you'll have to pay a little bit extra to do a spread instead of a single leg, but I think it's worth it most of the time. If not for the caution factor, meaning that you know that the market you're not able to lose more than a certain amount on the short premium you sell, but also just for the peace of mind. The peace of mind that you're going to get when you're buying one of those garbage out-of-the-money calls or out-of-the-money puts as a form of protection, it does make your life in trading a lot easier to handle when you get some market moves that are going either against you or for you, depending on what way you're looking at. So to sum it up, in today's strategy block, whenever you're doing stuff to wait for a bigger move in the underlying, I typically recommend a vertical call spread or a vertical put spread. Not saying that those are the ideal thing for every time, but they're definitely some tools with which to look into for those situations. That is all for today, folks.
Wisdom from a bunker, listeners. Where else can you get such things? Only on the option block. As we keep on rolling, see if we can squeeze a couple of you on with a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, let's get to it. See how many we could squeeze out here on the show. Guy McCloskey, he wants to know, what are your thoughts on PCG? He sent this in a little while ago, so it's been kind of languishing, I think, unfortunately, in our mailbag. We get so many questions here. But hopefully, Guy, you're listening to this episode because we just spent a whole bunch of time talking about PCG. It's kind of the belle of the ball today. He actually included a chart. Looks like the stock was around 12 and change when he sent this in. And looks like at the time there was about 60,000 was the ADV, or maybe that day's volume. And he was wanting to know why we thought it was so volatile. We talked about it before. There's some issues going on in PCG land. We talked about how volatile it has been over the course of the year and how it continues to be a huge driver of options volume today. So hopefully, Guy, you listened today and you got your PCG fill. If not, you want more, write in and let us know. We'll try to get to you faster before PCG blows up here again on our radar. Next up, we've got Nick Tane. He wants to know, what do you think of this trade? He sent us a link to this article. I'm always a little dubious when people send us links to Zero Hedge because we've all been there. We all know what Zero Hedge likes to do. They like to kind of throw a bomb in a room and then get the heck out of Dodge and enjoy the chaos that ensues therein. So not always the most reputable of sources, but they do a decent job sometimes in their flow analysis out there. And he sent us a link to an article from last week that says, mystery S&P put buyer makes $31 million profit in 24 hours. And then covers half of the position. And the article pretty much breaks down exactly what you'd expect. There was a put buyer of the Jan, looks like Jan 2980 puts in SPX, not in SPY, an SPX listener, so a little bit more sizable, obviously. They spent, everyone likes that premium outlay, they spent $32 million to protect against what they're terming a 4.5% drop in the S&P. And then he, as he put it here, this person came back in the next day. Looks like they did pretty well and dumped out about a third of it, or right around, he says half. Because they did 16,000, so I guess 8,000 would be half of these puts here for making what he terms 31 million, keeping the rest on pretty much for free. In times like this, I like to look at some tools, including one of my favorites out here. And not just because he's in the chat. I like it. I use it all the time. It is, of course, the life-to-date flow history available over there, courtesy of the Flow Masters Option Alert. If you're not using it, head on over there. Check it out. Kick the tires over there. I use it all the time. If you do that, you'll see all sorts of fun nuggets. Like the fact that they did actually that day, he mentioned 16,000, but actually nearly 26,000 of these Jan 2980 puts went up that day. So unless this guy maybe inspired someone else, or maybe this guy did more paper than that Zero Hedge author maybe initially saw. So in which case he only took off, if that's the same trade, he only took off for actually about a third of his position. Still had quite a few open. But also worth noting, if you pull it up right now there in the old option alert there, you'll see actually more traded recently, about nearly 17,000 went up again on the 6th. So he did about 26,000. Well, someone did 26,000, maybe not all this guy. About 26,000 on the 2nd, then took off about a third of them on the 3rd, so these worked out pretty well for him. Then looks like he's liking more because he put on about 16, 17,000, and that was indeed additive. So the OI right now is right around 42, 43,000 contracts. So seems like our friend liked what he saw out here, and not only is he putting his money back to work, he's putting more on. So I think that's an interesting one here. I don't know, Mr. Meatball, Uncle Mike, Mr. Last Emperor, I'll throw it out to any of you. I know maybe some of you are dubious of zero hedge, but what do you think of this person out here slinging, opening, and closing Jan 2980 puts?
The man's very bearish,
yes,
or very bullish, and very cautiously bullish if he's selling them.
I mean, guys, the question is, though, if you put it on, let's say that we're assuming that, he knew something nobody else did, on the market sold off, right? You had 3 days worth of a sell-off, I think, total amount of around 80 points. If it took off third, but left the rest of them on, you probably, gave up a lot of those gains, probably hurting at this point, because we rallied 80 points off the lows, right? So it's all about timing. The factor is, of course, it's beauty of gamma and volatility expansion then on those puts as the market was selling off. But then again, right, if you don't take them all off, or you still have the majority of the position on, you're probably looking at a pretty substantial loser at this point, right?
Yeah, it kind of depends how you parse what he did. If you just look at the zero hedge way, maybe he saw a block of 16,000 and then he took off half. According to that guy, it looks good. But obviously, clearly more went up that day than the zero hedge guy saw. So perhaps more than meets the eye to that trade. As we keep on rolling into our final segment, it is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, we're in that weird area, a lot of vague macro stuff to keep an eye out for, like impeachment and all the fun lurking therein, but there also are some more specific things to focus on. Let's start back in the Fidelity hot seat. Mr. Last Emperor, sir, what is on your radar for the rest of the week?
Yeah, watching a couple of the earnings that are going to be coming through. I know that LULU generally tends to be pretty volatile. We have Costco in the middle of the week. I was also looking at Micron as one of those companies that reports late, generally speaking, and also likes to move quite a bit on earnings. So those are the three things I'm watching. Obviously, there's a Fed meeting that's going to end with a presser at 2:30 on Wednesday. So, I'm not sure how much of new news we're going to be getting from them, if any at all. But for now, it seems like the market is not expecting fireworks necessarily. I was looking at a straddle in SPX for Wednesday, and it's pricing in around 20 points or so in either direction. That's not a massive or huge move by any means of imagination.
All right, and Mr. Meatball, sir, what is on your radar here for the rest of the week, at least until we can gather here together on the program on Thursday?
We're currently in office debating, and we're in office here. I've got big blonde hair and Leisha here, deciding what my sign off should be on my emails. So for those of you that are listening in or are on Twitter, tweet at me what you think would be a great sign-off on an email for Mark Sebastian. Super open. So that's one thing I'll be watching. The other thing
I'm down for Go VIX Go. How's that?
Go VIX Go. Go VIX Go. Hey, SIBO, what do you say? Vol is gonna rise today.
How did I know that would set you off? There you go.
I don't like that. I think it would have to be at one, this is a Spikes network, not a VIX network. Two, I would be I'm watching, like I said, I think I'm watching the Fed, I'm watching the VIX. The VIX and Spikes have both been really bid heading into what appears to be some sort of trade finality, at least the way the market is viewing things. So I think pay attention to that 15 VIX. We're not moving around very much, and yet the VIX is 15. So keep your eye on that.
I like that. Maybe Go Spikes Go. How about that? Go Spikes Go. We'll workshop it here. Listeners, if you get an email from Mark soon, you could check out what our thoughts are. And last but not least, Mr. Uncle Mike, sir, as you're preparing for the end of times, what is on your radar for the rest of the week?
Well, I think I'm going to put the kibosh to Seabass's email sign-off right now, because the first thing that I thought of on there was up in Green Bay, at the Green Bay Packers, they have the chant, go, Pack, go. So I think him knowing that will probably put the kibosh on the go, VIX, go one. But anyway, with that, watching the 315 mark with the S&P, I'm watching the VIX a little bit. Mark's right. It is at 15, and it's not really moving around. Markets aren't really moving around that much. And then watching macro stuff, seeing where we're at. So that's pretty much it.
All right, and that's pretty much it, unfortunately, listeners, for this fine program as well. But if you need a little bit more in your lives, a little bit more in your ear holes, don't worry. Stay tuned. I'll be back quite shortly, actually, with a nice little quick edition of the Crypto Rundown to get you updated on all the fun things going on in the world of crypto derivatives, volume, volatility, skew, all that good stuff. So stay tuned for that. Shortly, if you're listening live, listen after the fact, of course, whatever device you're on, just hit next. Should be there waiting for you. But before we go, let's go back around the horn, see what's cooking with everybody. Let's start in the land of the hot seat. Mr. Last Emperor, sir. If folks are intrigued, they want to learn more about what's cooking on the option side of Fidelity, where should they go? What should they do?
Yes, ladies and gentlemen, would be a pleasure to speak with you one-on-one. If you are already a Fidelity customer, you could call your customer service number and request for an appointment with me directly. I'm the only one here. Should be pretty easy to find. You could, of course, apply for options trading and open an account by going to fidelity.com/options. And, of course, for all of the coaching sessions that we do on a daily basis, including screen share, where you get to see us on camera, would be fidelity.com/coaching.
There you go, listeners. Begin your journey, fidelity.com/options. If you are a client, if you want to sign up, today's a good day because you get the Last Emperor all to yourself. How often can you say that? So kick the tires, light the fires, call up, ask for the Last Emperor. He's the only guy there. So you can get him there today. Get while the getting is good. Fidelity.com/options is the place to go. And Mr. Uncle Mike, sir, if folks want to reach out to you, maybe even into your undisclosed location, where should they go? What should they do?
stcharleswealth.com. Be happy to talk with people on investing. I'm actually one of the few financial advisors out there that understands what a put option is, or a call for that matter. Feel free to reach out to me.
There you go. Reach out to them. You can begin your journey. stcharleswealth.com is the place to go. And also, last but not least, if you too have a thought on what his email signature should be, or maybe you want him to text you throughout the day, or maybe you just want to check out a Ball newsletter, Mr. Meatball, where should they go? What should they do, sir?
You know what? Go to outfit.com and schedule yourself for to get all of our new emails. We're going to be launching our email newsletter this week on top of our video that we're already doing. And so I just need that awesome sign-off. So tweet at me at OptionPit, that great sign-off. And if I pick yours, I'll send you a prize.
Unless you live outside the continental U.S., then you expect to wait about a year for that prize. As some of our listeners know what I'm talking about. Tweet at them, at OptionPit. You, too, can win fabulous prizes within roughly a year. So at OptionPit.com is the place to go to learn more. And on behalf of the Meatball and Uncle Mike and the Last Emperor and the whole Fidelity crew over there, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in those questions. We love to hear from you on all sorts of various issues, zero hedge and otherwise. Keep them coming. And we'll see you back here for this program on Thursday. But if you need a little more in your ear holes right now, you're listening live, stay tuned. We'll be back shortly. Pump a little bit of fun stuff there in the intro. We'll be back shortly with a little bit of the old Crypto Rundown. Otherwise, we'll see you back here on Thursday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.